Hello everybody, welcome to a new RRG video. I'm recording this on the 15th, on Thursday the 15th of May. My name is Julius de Kempenaer and I am talking to you from Amsterdam in the Netherlands. Let's face it, this market is surprising me, to say the least. If you have followed these videos and maybe the RRG blog, you know that I wasn't too sure. I was very cautious. I have voiced a few times that I thought that the upside potential didn't weigh up against the downside risk. Well, here you go. Plenty of upside potential and almost zero downside risk, at least for the last 2 weeks. And that is immediately my biggest point of worry, because what are you going to do right now? The only thing I can do is just basically go over the relative rotation graphs. We'll address a few of those, maybe look at some individual charts and see if we can find, or if I can find, a assessment of what's going on and get to a coherent view. Not sure whether it will work, but we're going to try. Let me start at the top, at the asset allocation level. And here is the RRG, the relative rotation graph that I usually use to show what's going on an asset allocation level. And I guess this is probably the picture what is bothering me right now and for the last couple of weeks. Because if you look at this, stocks are the only asset class inside the lagging quadrant, and government bonds and commodities and even Bitcoin are all on the right-hand side, spread out over leading and weakening. Now, this is showing trends in relative strength, and I can't stress it enough. It doesn't show absolute price performance, and a trend doesn't move in a straight line. So it doesn't, this constellation of positioning of the tails doesn't necessarily mean that the trends, the relative trends that we're looking at, are going straight up or straight down. So the fact that government bonds, for example, is inside the leading quadrant doesn't mean that government bonds is continuously outperforming the benchmark, which is in this case VBINX, which is a Vanguard balanced index fund. And it also doesn't mean that stocks, SPY, which is inside the lagging quadrant, is going straight down. But the developments over the last 2 weeks, last week, are super strong, and they're happening really fast. And that's a problem with every trend following strategy, and relative rotation graphs are no different. There is definitely a lagging component in there. We do need some underlying data to do the calculations and the comparisons. So with this in mind, how do I look at this RRG right now? This is weekly. So the relative trends are, to me, super clear longer term. Bonds, government bonds, corporate, high yields, even commodities, they are in relative uptrends versus VBINX, and stocks are in a relative downtrend. That's on the weekly basis. If we move this to daily, you will see quite a different picture. You'll see SPY as the only sector, or stocks the only sector inside leading, moving further into it. Bitcoin, very, very strong recently again. And then you see this whole cluster of commodities and fixed income related securities inside the lagging quadrant. Although, for example, commodities are already picking up relative strength again, or relative momentum, as well as the US dollar. And, well, high yield is picking up. Corporates and governments are still moving lower. The of analysis, or what it comes down to in terms of analysis, is that we have to basically combine those weekly and daily views into whatever we need to do for our investment portfolios. And that's where it becomes very subjective in terms of what we have to do, because not all investors are the same. Some people have an investment horizon of 9, 12, maybe even longer months. And for other investors, we always used to joke on the trading floor, lunch is long term, and anywhere in between. So how do you interpret that? depends completely on what type of an investor you are and what your investment horizon is. And don't fool yourself, because sometimes the investment horizon for a position or for a trade changes with the open performance of that trade. Reminds me of a little joke which goes like, what is the definition of an investment? And the answer is, that's a short-term trading opportunity that went south. So again, performance, investment horizon, and the tools that you use also for RRGs depends very much on what type of an investor you are and what kind of an investment horizon you have. Personally, and that's also what I try to bring to these videos and to these blogs, I'm a little bit longer term. I'm not extremely long term, but I'm a little bit longer term. So I don't know, a minimum of 6 to 8 weeks for a position, 4 to 8 weeks. Anyway, with the speed of the move that we've seen, that type of an investment horizon is extremely difficult, because what happened over the last 2 weeks was extremely counter trend when you look at a longer term chart. So if you go, what we just did, to the weekly RRG, the outcome here for me is still that these are the securities or the asset classes that are outperforming, and this is the underperforming one. These are in the green, these are the uptrends, and this is the downtrend in terms of relative terms speaking. If you look at the daily, it is very different. So how do we bring that together? For me, the longer term chart, so the weekly chart, remains leading, because usually that's where the longer term trends develop and emerge. The daily version is the shorter term, and that plays into what's happening on the weekly. If you look at the weekly chart, you see all these commodities and fixed income in the green, and they're now, especially commodities, are starting to pick up again. Stocks are in lagging and picking up, and here, but it's still inside lagging, and here is SPY moving into the leading quadrant. It's hard to, the combination for SPY is hard, because it's on the weekly, it's starting to pick up again. So the weekly is starting to get back in sync with the daily. Whereas I personally like to see the daily get back in sync with the weekly. And that's what's happening with these boys here. In the end of the day, I don't think there is a very clear-cut trend in terms of relative strength. Beware, this is all relative, to be seen. If you look at the price chart of SPY, we'll look at that in a minute. But this is relative, and the outperformance of stocks is basically only over the last couple of weeks. It's not a real trend yet. So I'm going to leave it at this for the asset classes. It's mixed. Stocks were in the doghouse. They were in a relative downtrend. Fixed income securities were in a relative uptrend. And there is a lot of moving parts right now. And that is a dangerous situation because if you change your view on a hunch right now and not really backed by what you see on the charts, you might be moving over right at the point where the market is going to continue its prevailing trend. And from a relative perspective, on asset class level, that is still a relative downtrend for stocks. So I'm going to leave it here with like the positioning super neutral. Gotta wait and see what's happening. I wouldn't have the guts to short stocks. I mean, I'm not a short player anyway, but underweight stocks. So you probably want to have stocks at neutral levels or back at neutral levels, which in this case is 60% stocks and 40% fixed income is in the Vanguard Balanced Index Fund. Let's take a look at what's happening on a sector level. So when we look at sectors, I have set up my screen with the weekly RRG on the left and the daily RRG on the right. And this allows me to look at the weekly and daily rotations side by side and see whether we can find confirmations or negations of those trends and find a common denominator between the two timeframes. When we start with materials, you can see that on the weekly, it's inside the leading quadrant, but it's already rolling over. On the daily, materials is inside the lagging quadrant on a very short tail, basically doing nothing. So for me, this indicates that that weekly trend is immediately starting to roll over. And when this moves into a negative heading, this is very likely going to be confirmed by that daily tail. So this is not a strong sector at the moment. If you go to communication services, we'll see that we know that this has been a very strong sector for a very long time. If you look at the rotation, you see that it remained inside that quadrant. This was happening in November 2024, and we continue to move there, made a few rotations. We're now inside weakening, but we're still on the right-hand side, and I'm going to argue still enough space and room for communication services to curl back up and become a leading sector again. If you look on the daily RRG, you can see that the tail of XLC is very close to the benchmark. It's not, which basically means that it's moving in line with the benchmark, which is good at the moment because benchmark's going up. So XLC, I think, remains one of the stronger sectors. If we look at energy, here is where it becomes interesting because on the weekly, you see a rotation inside leading, almost hitting weakening, not at very high RS ratio levels. And here on the daily, you see a very strong tail for XLE pushing into the improving quadrant at a strong heading. They're pretty much moving in opposite directions. So what is the leading move here? That is almost impossible to say. Is the weekly trend prevailing? And will we see a daily that is starting to roll over either inside improving and back down, or shortly into leading and then back down again to join the weakness of the weekly RRG? Or is this the start of a new move, and will we see the weekly turn around very quickly and go back? Hard to say. So for me, the energy sector is a tough call, I'm going to say. That means neutral. If you go to financials, then we see a weekly tail, relatively short, which means that there is not a lot of power behind the move, just dropping into the weakening quadrant, but in a well-established relative uptrend. Here we see financials inside the lagging quadrant on the daily tail, but moving upwards. And I'm going to say, so this is, well, here you go. This is picking up a positive RRG heading. So when you have to scroll in this much and the tail is so short, it basically means that it's very stable, and close to the benchmark means it's moving in line with the benchmark. Again, just like communication services, it's good because the benchmark's going up. So financials is one of the stronger sectors at the moment. And then we have industrials. And here you see a confirmation. So here's the weekly tail pushing into the leading quadrant, and you see the daily confirming that move, pushing it further into the improving quadrant. So this is definitely one of the leading sectors. This is what everybody wants to see. Where is technology? Well, technology on the weekly is inside the lagging quadrant, albeit almost inside improving. It's on a positive heading, but it's the second lowest reading on the RS ratio scale. We go to the daily tail, it's the strongest reading on the RS ratio scale, inside leading, but it's already starting to lose relative momentum. So what is the leading part here? Well, this is not leading anymore. It's already starting to lose relative momentum. And if this continues, and by the way, these five nodes here is only for this piece of the move. If we would totally align them, this is 5 weeks, we would need to go to 25 days to basically mimic the same period. Here is 25. So look at this. It's getting there. If this picks up again, if this picks up renewed relative momentum, then this could be the leading move which start to drag technology into improving and then into leading. But if you can look here, this is going to take a while. And the question is whether that daily tail with the current rate of change on the price chart will be able to make that move. I'm going to leave it at this. This is an interesting view. So technology, it is improving for sure, but I'm not entirely sure whether the improvement is fast enough to drag that weekly tail all the way back into the leading quadrant. Eventually, maybe, but I'm not sure whether it's going to happen from current levels. Maybe we need a little bit more of a setback. Here is consumer staples, which was obviously one of the stronger sectors recently. It's still inside the leading quadrant on a weekly basis, still the highest odds ratio reading, but the daily is very, very weak. It's a long tail pushing further into the lagging quadrant. So here, how long does it take, or will this daily tail be able to curl back up and cause staples to remain inside the leading quadrant, or do a very quick leading, weakening, leading rotation? Again, the market will tell us, but it's definitely slower than what we currently see happening in front of our eyes. And I'm not the person or the type that adjusts a view basically on a whim. And then I know price pays, and I love that phrase. And it's you gotta pay what's on the price chart. But what we're doing here, and that's totally true. But what I'm trying to do here is find out what's happening under the hood, and whether the current move that we see in the market is sustainable to turn all of this around into a new or a continuation of the really long-term uptrend. In the end of the day, I still believe we're in a really long-term uptrend. I warned for hey, the upside potential is limited, downside risk is serious, and that was all happening within that longer-term uptrend. The end of the day is we're not participating enough in the current rally. And the question is whether that is a huge problem in the bigger scheme of things. We move to real estate. You can see similar. So on the weekly, it's a rollover, and you can see the confirmation inside the daily. So this is right now, these two are confirming each other. So this is expected to continue further. But again, these are the fact that these RS ratio levels for these sectors are so high means that the trends that they're in are very strong, and it takes a little while before those strong trends are turned around and actually show up, or give in or turn around into a relative downtrend. It's just it did not happen yet. Go to utilities. Obviously, one of the defensive sectors, super strong. Look at how strong that weekly tail is. It's rolling over the last 2-3 weeks, and that's what you see here. So this little dip here was caused by this huge rotation on the daily RRG. How long are these rotations? This could 2, 3, 4 nodes, and then utilities will be inside weakening. But by that time, we could see this all the way back into the improving quadrant, completing a complete rotation. But that makes it super hard at the moment, because the differences between the sectors on the different time frames are pretty big. There's only a few that are confirming each other. So here also utilities, I'm inclined to say that this is the leading trend, and that we will have to wait until the daily utilities tail will start to pick up again and help the weekly utilities to complete a rotation, leading, weakening, leading. Quickly go to the last two. So here is healthcare. That is probably the weakest sector at the moment. You can see this tail rapidly starting to pick up momentum. Look at we call it RRG velocity, which is the distance between the nodes that's picking up, that's increasing. And we're at a negative RRG heading. And the daily tail is going super, super fast into the lagging quadrant. So that is clearly a very weak sector at the moment. And then we have consumer discretionary. And here you see how this is confirming. You can see how this daily tail here rotated back up and is now basically pushing back into the leading quadrant, while the weekly tail is starting to curl back up. On the weekly, consumer discretionary is still the lowest reading, but it's rapidly improving because that daily remains on the right-hand side, or mostly on the right-hand side. If you follow my blog of the best 5 sectors, we're getting hammered right now in that position. I mean, the good news, I'm going to say there's good news and there's bad news. The good news is that we're still fully invested in the stock market. The bad news is that the sectors are getting hammered right now on a relative basis. They're still picking up something, but the other sectors are going faster. So at the moment, I just looked, it was about almost 6% underperformance. So that's this week after last Friday. When I wrote my blog article last Friday, we're 3% behind the S&P. Right now, it's almost 6%. So you can see how rapidly those changes go on the downside. But I know that they can make similar moves to the upside. So do I like it? No. Am I worried? A little bit. Am I too worried? No, not really, because this is a longer term play. And if we would make the selection right now, so right at this point in time, then the ranking would be almost the same. The only difference would be that industrials has replaced real estate. So right now, and I'm looking on my list, is financials are 1, industrials jumped all the way up to 2, utilities is 3, communication services is 4, staples is 5, and real estate dropped out of the top 5. Technology moved up to 6. Now, this is nothing yet, because it's based on yesterday's closing prices, so that's Wednesday's closing. So we still have to put into account today's market, and we still have 2 hours to trade from when I'm recording this, and tomorrow. So, I mean, it's not a fast-moving system, as you know, but things could change, especially because a lot of the positions are really close together and the ranking is really close together. But my point is that at the moment, even with this move and even with the current underperformance, the composition of the top 5 is still, I'm going to say, pretty defensive, with staples and utilities in there. Healthcare, obviously not. And then there's financials is the strongest. And then we have communication services and industrials, which have been doing really, really well recently. So all in all, despite the move of the S&P 500, I'm going to bring up that chart in a minute. I'm going to remain that the composition of the sectors, the position on the asset allocation RRG, are still not sending me super bullish signs. But the market is acting super bullish. So what am I going to do with that? If I would just trade the S&P 500, you probably want to be long. If you have a portfolio view and you have an outperformance obligation or desire, situation is slightly different.
It won't be a surprise that I am the premier user of RRGs on Stockcharts.com. But don't be fooled, we have much more. We've got summary pages. We just launched a new market summary page. It looks awesome. It's got a lot of information. We've got market carpets. We've got yield curves. We've got tons of market breadth data. And obviously, we've got all the standard charts. We've got candlesticks, open, high, low, close bar charts. We've got pointer figure charts. You're able to overlay MACDs, RSIs, all the indicators you want. Enough reasons to check out Stockcharts.com. At least take a free trial. And after that, we'd love to see you as a subscriber to our service.
Okay, so let's wrap it up with a view of the S&P 500 SPY. So here's the weekly chart. And as you can see, that dip, I'm not sure if I've ever seen a recovery this fast and this strong. But we have to deal with it. Where are we now? Obviously, the lower highs, lower lows on the price chart's broken. So this is not a downtrend anymore. It's not an uptrend either, because we don't have a higher low. We have a higher high. I'm going to say this is a high, so this is a higher high. We don't have a higher low. So that's the first thing. We are currently, I'm going to say, at a resistance level around 590. Whether that is strong enough to to stop this move? I don't know. There is a serious level around 610. That's the level of the all-time highs. I'm going to say that is a serious resistance level. But also, with this change in terms of price trend, we now have to adjust. And again, I'm totally aware of the fact that we kind of missed this move up. The key is, how are we going to deal with it? The way I'm looking at it is that this old resistance level here, which I thought was going to be strong, which it wasn't, which is 574, let's say 574, 575. That should now start to act as support in order to keep this move sustainable, and otherwise it's going to be 557, probably 560 by the time we get there. We will then also see a further improvement in the RSI, and we will see a confirmation in the MACD. That's the longer term view on the weekly chart of SPY. We bring that to the daily version. Then again, this is stellar move. Here you will see higher highs and higher lows. By the way, it's a very good example of how daily and weekly trends can seriously differ from each other. Here you see that over the last 3 days, that 590 area where we're trading right now as we speak, is so far still held up as resistance. I sure hope that by the time this video gets produced and published, that we're not like trading around 600. I'm not going to rule it out in this market. But RSI getting overbought, long stretch in the MACD. So how strong is this move to continue straight on? I have my doubts. Do I want to go against it? No, not at all. Will I be patient? Yes, probably. Does it mean we may lose a little bit more upside potential? Yes, probably. But it feels better, at least for me. I sleep better with that type of approach. I know that the market will be there next month and next year for me as well. So I was going to say not a big deal, but it hurts. So it's kind of a deal, but not a super big deal, because we will have plenty of opportunities to make that up. Again, we're currently trading in the resistance area. It'll be very important, very crucial to find where a setback, when it comes, and I'm pretty sure it will come, but it will be very important to see from which level the setback starts and where it stops. And that'll give us an opportunity to readjust and reassess and get back on track following this market. Anyway, I hope you enjoyed me sharing my sort of like, sometimes it's not super clear. So you got to deal with it. And I think it is the way you deal with it that helps you grow your portfolio and become a better investor. Let me know what you think in the comments. Share your views. Always interesting to see. Thank you for watching. I hope you liked the show, and I'm looking forward to seeing you again next week at a new RRG video.